Hi everybody, thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over our watch list for the week ahead. This watch list includes names like Apple, Tesla, NVDA, AMD, and Amazon. We're going to give you all the resistance and support points that you need for these stocks. That way you know exactly where to enter, where to take profits, and where to cut losses if you have to. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that last week we moved back above a very significant trend line. This is a trend line we talked about for a few videos now, and this is the red trend line that you see here on our chart. So we've turned down below this trend line 1 time, 2 times, 3 times, 4 times, and 5 times, and now we're trading back above it for 2023. So this is a significant point because anywhere above that point, buyers are in control. Anywhere below it, sellers are in control. So twice through the last couple months, we can see that sellers tried to regain control. Both of those times they failed, and buyers came in at those supports and pushed us higher, which means that this rally is likely just getting started. Now, here are some levels to focus on in the very short term for SPY, but before we get into these levels, we have to talk about some important things that happened last week and some important things that are happening this week. First of all, last week we got the latest CPI and PPI report data, which pretty much just gives us the reading of inflation. Inflation came down to a reading of 3%, which is just above the Federal Reserve target of 2%. So we've come down from a high of around 9% to now just around 3%. So things are improving, and you can actually see that how inflation charts curve down, market charts curve up, and that's because inflation has been the kryptonite to our market rally in the last couple years. So now that inflation is cooling down, obviously charts are pushing back higher. Investor confidence is growing, and not only is investor confidence growing, but we can see that consumer confidence is also growing. So the consumer sentiment report on Friday jumped to near a 2-year high. So the last time we read higher than this was September of 2021. So you can see that we boosted ourselves back to 72.6. That's because consumers are out there, they're buying. Amazon actually just recorded their best Prime Day ever. So things are looking good. Our economy is expanding, and everything is looking like it's moving in the right direction. This week, we are expecting earnings from very important companies. So these companies are going to be companies like Tesla, like UAL or United Airlines, and like Netflix. So be on the lookout for those earnings. Keep in mind, many companies have ran themselves into new highs for the year, which means that they need to report good earnings in order to keep those highs, to keep those valuations. Above all, no matter what's happening in the economy, the main driver of the market is going to be fundamentals, and that's going to be company earnings. So these companies need to come in line to expectations in order for them to continue this rally higher. And if they don't at least come in line with expectations, pay attention to their forward guidance. You want to know what they're projected to do in order for you to gauge what they could possibly trade at in the next quarter. So pay attention to earnings. They're going to be critical this week. The market levels are very reliant on it. Speaking of earnings and levels, during times of uncertainty, which is a time like this week when we're going into a key earnings week, companies like Tesla and Netflix, who hold so much weight in the market and can kind of foreshadow what other earnings can do. So like Netflix subscribers can kind of give you an idea of what Disney Plus subscribers would do. So you have to relate different things in the market. What can Tesla earnings tell you about all EV makers or potentially lithium stocks? So you have to dig deep into earnings. Don't just take them as face value. Don't just read the headline. Go into the report. Take a look at what the company said. See how this can give you an opportunity not only within the company, but other related companies or sectors that could possibly move because of these earnings. So now let's move back into our charts and talk about some key levels to watch for the week ahead. First off, we have the main resistance on SPY at 451.36. And the reason why that's the main resistance is because on Friday, that would be the highest point we saw before we saw a very strong downside rejection. Now, mind you, we still closed way above the previous day's lows, which keeps us in a bullish trend. So our overnight trend is still bullish despite the strong pullback. Now, pullbacks of this magnitude are going to become a more common occurrence during a bull market that is moving with extreme greed. And that's because there's going to be a lot of shakeouts and a lot of people taking profits at the top. When there's extreme greed, markets become a little choppy. However, you need to pay attention to their overall trend. If the overall trend is still bullish, don't be quick to jump onto the other side, because a lot of times these are just pullbacks, and buying the dip is going to make you a lot more money than trying to chase a downside pullback. Now, if this pullback does continue further and it breaks below 448.50, then we can see 445. But things are not going to look that bearish, or things are not going to look that weak until we move back below 445. And the reason why 445 is such a key support is because you could see that markets consolidated for about a month below that point before they gathered enough strength to break out of it. So you need that 445 support to be held. If we move below it, then we would consider talking about shorts or a put position, but we would still be generally bullish on the market. It would just be a very strong pullback that we're seeing. So now that we know the general market levels, let's talk about some stocks that we're watching. First, we have Apple on our watch list, and Apple obviously has lagged behind the market in the later months. Now for 2023, the stock has done an amazing job, and it was actually outpacing the entire market for the better half of the year. However, now it has slowed down during the time in which the market is pushing higher. And that could be attributed to capital rotation. So investors like to move their money into stocks that are moving, and if they see that some of their positions are already overbought, they may not buy into those positions during the market rally. They will take some money and they will put it into new stocks. So that's why we're seeing stocks like Tesla, stocks like Netflix, stocks like Meta all starting to move, while Apple is just kind of cooling down. Now, the fact that it's cooling down and it's moving sideways is actually great news, because it means that buyers are still holding on to their positions. If it was pulling back during this time, that means people are taking their money out of Apple. But here in this case, you can see Apple is holding well, and it's actually still holding above its 10 and 20-day moving averages. Now, we do see a lot of unusual option data on Apple, and it's looking like it's very bullish right now. However, we will have to wait to see until it breaks above certain levels before we can trade it. If you are an investor in Apple, by the way, this does not apply to you. Of course, if you're invested in Apple long term, you do not have to sell, you do not have to do anything. We are invested in Apple long term, and it's one of the biggest positions, and we do believe confidently that Apple will keep going up. But if you're looking to capitalize on the short-term movement, here are some levels to focus on. First, we have the resistance at 193. Apple is still dying to break above that level. It needs to be above that level for buyers to confidently jump in and move it above its all-time high and move towards the closer target of 200. So here would be above 194.48, which would be the true breakout. Above that level, we can see that 200 mark on Apple, and it's likely going to continue much higher. Now remember, Apple's earnings are coming up early August, and last earnings, Apple gapped down, then continued its push higher. For this time around, Apple is likely going to gap up, but we will talk about the charts closer to that earnings date. Don't forget to subscribe so you don't miss that video. Now, if you are bearish on Apple, you're going to need a break below 186.60 for it to move to 185, but we would still not be confident swinging any puts on this stock just because it's holding such a bullish trend overall. Now, the next stock on our watches is going to be Tesla. Tesla has earnings this week, so let's talk about some key levels, and we also want to point out that there is a lot of bullish activity on Tesla's call options, but keep in mind that a lot of retail traders trade Tesla calls and puts. So if you are trading options on Tesla for the week of their earnings, we would highly consider that you give yourself at least 2 weeks till expiration. Do not trade this Friday's calls or puts if you plan on swinging them for Tesla's earnings. There is a high chance that market makers will keep the stock flat and they will crush implied volatility on Tesla. Right now, implied volatility on Tesla's call and put options is around 85%, which means you are paying about 40 to 50% higher than usual. So therefore, if the stock does not move as expected or as strong up or down as expected, even if you got the direction right, that implied volatility can get crushed, and the inflated number that you paid for your premium is also going to get crushed along with your profits. So that's just some advice from our experience on the market. Give yourself time if you are planning on trading earnings, even if you get the direction right. Sometimes if you go with too short of an expiration, you're not going to get paid. Now, Tesla, obviously very bullish on the daily candles above the 10 and 20-day moving averages. The stock filled this gap. This was their delivery numbers gap. This is another example of why you always want to give yourself time on your contracts. If you jumped in on this gap and you only gave yourself 1 week till expiration, you expired worthless. If you gave yourself 2 weeks, you're probably back in your premium now because the stock has recovered. So those who gave themselves time are rewarded in this case. So you can see here, Tesla is back up. It's trading near the 2023 high, and it's looking like it may want to break out of these levels here. So first of all, you need the breakout above 285.30 in order for the stock to move towards a very modest price target of around 289. The reason why our first price target is modest is because Tesla is the mother of all stocks that trick you. So market makers know retail traders are all over this, so a lot of times they'll fake breakouts and pull it back down. So our first price target is to take profits above 285.30 is only going to be 289. If the stock turns back down from 289, moves back to below 285.30, at least we took some profits here. If it moves above 289, at that point, our next price target is going to be a very aggressive one between 297 and 300. So we do expect the stock to rally towards 300. And since the stock has kind of consolidated here between 240 and 280 for about a month now, or more than a month, it is likely going to rally very strong when it finally moves to above that level. And so we can expect the stock to be reaching a 52-week high above 314 very soon, depending on how earnings go, of course. The next stock on our watches is going to be NVDA. And if you have been keeping up with our videos, or if you are a premium member with us, you know that our price target on NVDA is between 480 to 500, which it reached perfectly last week and got pulled back from. Now the pullback was very strong. However, NVIDIA is still in very much a bullish trend. Let's talk about its key levels here. You can see that NVIDIA above 440 is going to be strongly bullish. And the reason why is because below that point, NVIDIA spent weeks consolidating before breaking out. So it's going to be very hard to convince these buyers to let go of their positions that they have been working for about 4 or 5 weeks now. So above that level, we do expect NVIDIA to maintain its most bullish trend, and it can easily reverse back up and retest 475 to 480. Now above 481, the stock can continue its rally, and our next price target is going to be between 495 to 500. If you are bearish on the stock and you see it break below 432, you may take a put or a short position below that point, and your downside price target would be between 413 to 415. So if you get into this position and you need a stop loss, you can place a stop loss right around 440. So if the stock moves back above this point, you know that the bearish position failed and it's likely going to rally again. Now the next stock on our watches is going to be AMD. AMD went on a wild ride last week. You can see the stock moved to a high of around 122 and then closed Friday around 116. So very, very wild ride. However, the daily candles are back above the 10, 20, and 50-day moving averages. In fact, it's trading above all of its healthy moving averages. So the buyers are in control of the most recent and long-term price action. So let's talk about some key levels for AMD. If you are bullish on AMD, you need a breakout back above 122.12 for it to have any kind of continuation. The fact that the stock got rejected this strongly, it means that AMD may need a few days of consolidation or even a few weeks before it can move back to retest 122.12. Generally speaking, the stock is bullish, but it needs that breakout in order for it to continue towards its next price target of around 125 to 126. Now, if you are bearish on AMD, you need a move below 113.50 for it to move to a price target of around 111 and a second price target if it breaks the 111 support of around 109.50. Below 109.50, it can get pretty ugly for the stock, but we don't expect it to move to that level this week, especially because last Friday it had a very strong downside sell, so the stock is likely going to cool down from both the top side and the downside moves. Last but not least, the final stock on our watches is going to be Amazon. Obviously, there was a lot of hype around Amazon Prime Day and the stock moved sharply on Friday, but by the time the day ended, the stock had retraced its full upside move, which was the case for a lot of stocks. Let's talk about Amazon on the daily candles, where we can see that Amazon's daily candles managed to break out of this multi-week, actually multi-month consolidation period. And remember, the longer period that a stock spends consolidating on a breakout, the further that breakout can rally, because there's a lot of buyers that have loaded up their positions before they finally gathered up enough strength to have this breakout. So if you're watching Amazon on the short-term candles, you need it to maintain above the 133.70 level in order for it to hold its most bullish trend or most bullish range. Below that level, it has some breathing room down to 131.75, but you definitely do not want to see the stock re-enter this range here, and that's because that's the consolidation range, and buyers are going to be very upset if Amazon cannot hold, and they're likely going to let go of their positions, taking the stock down to around 128.80 or even a further downside price target of around 126. But if you are bullish and you are in the stock, you can confidently hold above that 131.75. You need a breakout above 136.65 for the first modest price target of around 138, and then the second price target above that is going to be around 140. Now, Amazon is considered to be one of the cheapest companies on the market right now, and we're not talking about the stock's price, we're talking about its valuation. And when that was the case with Meta, you can see that when Meta was considered cheap, which was right around here, you can see the stock went on to double. So if you are short-term trading Amazon, yes, you can take advantage of these short-term resistance points as your price target. But if you are a long-term trader, or if you are a position trader or investor, just keep in mind Amazon is one of the strong ones, and so it should be looked at with an investment lens. You should be looking at it long-term. If you are looking for long-term trades and long-term position trades, we do send position trades in our Hyper Wealth group. We're going to leave a link for that in the description so you can try it out. Either way, you guys, I hope you guys enjoyed this video. Please don't forget it is earnings week, so I urge you to give yourself time on your calls and puts if you are looking to swing them. Thank you guys so much for checking in. Please don't forget to subscribe and like.